I'm Martin King, property analyst at Edison Investment Research, and I'm joined by Richard Shepherd-Cross, who's fund manager for Custodian Property Income Trust. Good morning, Richard.
Good morning.
We're here to talk about your latest corporate acquisition. What can you tell us?
Yes, very pleased to announce that we have just completed the acquisition of Grove Court Properties. This was a majority share acquisition, so it was funded. The £35.9 million portfolio was funded with 24.1 million shares issued and 9 million of cash. It's added a very compelling portfolio to our existing 175 property portfolio, further adding to diversification. The portfolio has a net initial yield, property yield of 6.8%. That's accretive to earnings. It comes across with 25% gearing, mirroring the gearing we have already. So we still sit at 26% loan to value across Custodian Property Income REIT. And a really exciting way to grow the portfolio.
Thank you. And this is the second corporate acquisition you've made in the last few months. Can you talk about the attractions of those, apart from the immediate earnings accretion, the attraction of those, but also not only to Custodian, but to the sellers?
Yes, I think it's really important to acknowledge that, as with all transactions, it works for both the buyer and it works for the seller. It works for us because at a time when it is difficult to issue new shares while we are trading at a 11% discount to net asset value, making growth very challenging, we are able to grow by entering into all share transactions and corporate transactions. So Merlin Properties we acquired last year, and Grove Court Properties we've announced we completed on Friday last week. And we think it's a great time to buy real estate. We think that the recovery in values is well underway. The rental growth potential, which is the real driver of performance, is very promising in this portfolio. So the more assets that we can buy when there's rental growth, then the more we can deliver earnings growth to our shareholders. So clearly, from our perspective, this is a great deal. So the question that you quite rightly raised is, what makes it attractive to the vendor, and why didn't they just sell for cash? I'll paint a picture, and I think this is a picture that is replicated many dozens of times across the country and across the property market. Family property companies, typically built up over one, maybe two generations, have long-term holdings that are pregnant with very significant capital gains. And if the family were to sell those properties for cash, they would have to settle corporation tax on that chargeable gain. They then have to dividend the money out of the company or wind up the company. All of that is timely, takes a lot of time, is very expensive, and not very tax efficient. By selling to a real estate investment trust, which doesn't pay corporation tax, the chargeable gain in the family property company gets extinguished as soon as that company joins our REIT group. That means we can pay gross price for the assets of the company. We don't have to make an allowance for the chargeable gain that we would have to settle if we were a tax-paying entity from buying the shares in the corporate vehicle. So straight away, the vendor is ahead because that chargeable gain doesn't have to be settled. As a corporate transaction, there's no stamp duty land tax, so there is a significant stamp duty saving. And in many cases, the shareholders of the family property company can get holdover relief for transferring from shares in the family company into shares in Custodian Property Income REIT. So while that personal CGT liability isn't extinguished, it is held over and doesn't have to be settled. So this means that a family can exit fully gross of tax into shares in Custodian Property Income REIT, which means that they can get the maximum possible dividend. These opportunities come about very often when there is a succession issue, one generation trying to pass assets down to the next. Now, the nature of a generational shift is that there are probably more people in the younger generation than they are in the older generation, and therefore trying to find a single member of the family to take on the management of the portfolio, even if they had the interest, and very often they don't, that's very challenging, and you have a increasingly disparate group of family members who all want to go in a slightly different way. By completing an all-share transaction with us, we are now managing the portfolio. The family then have an equitably divisible, and this is really important, an equitably divisible asset in shares in Custodian Property Income REIT that they can pass down through the generations. It's really difficult to equitably divide a property portfolio, particularly when you are dividing it amongst a generation who may not want to manage those assets. And by converting it into shares in a larger trading property company, or a listed property company, you also diversify the income base, so more stable income returns. They are fully managed income returns because we're managing the portfolio, and you also provide liquidity because our shares are traded on the main market. So it is really a genuinely symbiotic relationship, and we, of course, get the benefit of a new and substantial shareholder who have for many years been invested directly in commercial property. They're now invested indirectly through Custodian Property Income REIT, and they've shown their true colours. They are long-term investors in real estate, and they hold it for income.
Should we expect more deals like this?
I think you should. I mean, we are very actively looking at a pipeline of opportunities, and I think as the message gets out into the market a little bit more, then we are likely to see further opportunity. It doesn't work for everyone. Some people do want cash, and in the case of Grove Court Properties, we gave them 25% cash as part of the consideration, and that worked for their particular needs at the time. But I think I would definitely say watch this space. We're very active, and we've done completed two of these transactions, and we think there's plenty more to go at.
Great. Thanks very much, Richard.
Thank you.